Good morning, everybody. It's Chris from Serene Education with the 4 Majors Nuts update for the 15th of November 2013. And it's a Friday, end of week, guys. Let's have a look and see what the week has done. And for the weekend, see what we can expect before the close this evening. Okay, so looking at the euro against US dollar to start with, using the FX8 Ultimate template. I just want to have a quick look at the fundamentals. Friday, what do we have? Inflation rate, core CPI year-on-year figures, and then followed by manufacturing sales month-on-month figures for Canadian dollar at +1 this afternoon, GMT, and then followed by the US market news, which is the Empire State Manufacturing Index. We have import prices month-on-month, the capacity utilization rate, and industrial production month-on-month figures for the US market. So a lot of news this afternoon for the US market relating to manufacturing industrial production figures. Very, very important. You're going to see growth in any economy. You got to see those being really, really positive. They're expecting a good figure for the Empire State Manufacturing Index. They're expecting a good figure for the industrial production a contraction for the industrial production month-on-month figure, which is not all that great. Import prices, they're expecting a contraction as well, from a positive 0.2% to a negative 0.4%. That's not good. So we hopefully those prices will come out a lot better than that. If they don't, then we could see a slight push to the upside for any crosses against the US dollar this afternoon. However, let's have a look at the US dollar, the euro against the US dollar to start with. We've seen a lot of upside over the past couple of days, this week in fact, and I was pulled back after the negativity on the interest rates announcement last week on Thursday. Then we had Friday's non-farm payroll figure coming lower. However, we didn't see any of that momentum on the non-farm payroll figures carrying price any further to the downside. And what we saw was price actually pulling back through Sunday. We had a consolidation on Sunday evening. Then Monday we had a lot of buying strength up, and then taking us above a very important area here in the shape of the 38.2. However, coming unstuck at the 50% retracement level here. Noticeably, a lot of consolidation along this area around here, which is my 50% retracement on my monthly fib level. So a lot of consolidation on Wednesday, Thursday, and now subsequently going into Friday, we have had a very, very small trading range. But it's been price is trading between the 2 points now. It's been squeezed between these 2 points. You can see that at this level, there's a noticeable, if you break above the 50% retracement level here on the monthly, you also have the weekly 23.6, which is quite close. So this band of here is quite tight. The institution is below price. You can see the indicator box telling us that long-term sentiment still favors the upside. However, intraday, we are seeing a bit of negativity. The R-squared isn't really complementing that negativity, so it's more almost like consolidation negativity. There's no true direction in it, and therefore price is going to be quite flat or consolidative, non-directional. And you can see the reason why. They have the 50% monthly retracement in the way of things. So if we go down to the 4-hour time frame, you can see that price has been consolidating this week, making swing highs, which is what you want to see, then a pullback or consolidation. And however, you can see as we've headed higher, there's been a lot more uncertainty unfolding recently over the past couple of days. In fact, we had Eurozone meetings yesterday, and we saw no movement, and you can see a lot of indecision candles on our 4-hour. We want to see a decisive candle. Price on the 4-hour, we have a blue arrow, blue candles. RMO is flat, so non-trend relating, and that's giving us a clear indication of that. See, price not moving anywhere sideways, RMO is going to be flat. The RSI indicator is above the zero level, primarily because we had a pullback over the past couple of days. So, if this is to be positive, if euro is still to maintain the positiveness, long term, we got to see this fib level here on the monthly fib here above the 1349.30 change being breached as soon as possible. The longer we see failure here to get higher, you can see a lot more action around this previously support-wise. Now we're trading below it after those non-farm payroll figures that came out and the interest rates announcement dropped last week. If it maintains below the 50% level, then ultimately long-term that negativity is going to start taking a stranglehold and it's going to push the euro lower. So what we want to see is a bearish engulfing counter close lower than our weekly 38.2 level here at 1341.90. Then we could look to enter, stop, target down towards our next 50% retracement level here on the weekly, which is a nice healthy, looking at roughly 125 pips to the downside to that level, and then subsequently get below the 50% retracement on the weekly, target the monthly level here at the 38.2, which also complements the 61.8. Okay, sterling. Here again, you can quite clearly see on the daily a lot of resistance above price for this particular pair. Price has failed to make any new highs, and subsequently, the longer she's attempted to make new highs and the failure to make those new highs, she started to make swing lows. And on the non-farm payroll figures, last week in particular, we saw price really moving to the downside, however being stopped at the 23.6, and now subsequently now what we're seeing is a consolidation now around this level. So on the weekly fib here, you can quite clearly see the 23.6, which is roughly around 1594 and change, or the 1600 mark. If you want to go for a nice round figure, you can see there's clear consolidation on the daily. Look at the indicator box, guys. The US dollar, sterling is looking very, very good against the US dollar. We've had a lot of movement to the upside recently. However, as I mentioned, we have seen consolidation. Prices failed to make new highs, and subsequently prices rolled over. But in doing the rollover, she's failed to really take that rollover momentum and push lower with a lot of sentiment. We had a bearish engulfing candle a couple days ago, in fact, and what we wanted to see was price now being using the 23.6 as a ceiling level intraday. That failed to materialize as price shot up in the opposite direction. So now we have a almost a tweezer bottom on a very strong support and resistance level, and price has now subsequently started to move higher. It is now testing the prior highs that we saw just recently, and that's the evening star highs that we just saw recently. So if you want to take those highs, for example, because if price is to be positive, we want to see swing highs. At the moment now, she's made a swing low. So for price to be very positive, or look for another entry to the upside, at least towards the prior highs we've just come from at 1626 and 70, we need to see a bullish engulfing close higher on the daily above this prior swing, because this is the previous swing low. In fact, we had a swing low before that, just after that, but we need to get above this one. Get above that, then we can definitely target the upside with a lot more confidence. So now if I go down to my 4-hour time frame, straight away I get a bar signal. Okay, you can see we have a blue arrow, the institution moving average, and plus all the moving averages are below price. The last 4-hour candle closing higher. However, we got to get above this prior swing. Okay, you can see a lot of consolidation here through the 5th and 6th of November. So 5th, 6th, and 7th of November, we need to get above that. Above the 61, 11, 43 and change on a nice 4-hour candle breakout. Then the hourly that precedes the 4-hour needs to be above that 4-hour close, and then we could start looking for that upside movement. At the moment now, the RMO is flat. Yes, it's above the 0, but we need to see that confirmation candle moving higher. RMO is going to stay the same. On our awesome indicator, we want to see a nice bright green candle. That hourly candle is going to close higher, and then we can start looking to target the prior highs. Failure to do so, and we start seeing price dragging his feature, failing to break these prior highs, or the prior swing high here, in fact, and staying above the institution, then we should be looking for a bearish engulfing candle. The indicator setup over here would start favoring the negativity. Intraday, we should see a lot of red. The R squared maintaining that blue to tell us it's genuine, and then we should target back towards the weekly fib here, which is that major support and resistance level that price has been to over so many occasions in the past as our first initial target. US dollar Swiss franc, let's move this sucker over. There we go. US dollar rallied over the past couple of months through October going into November. We had non-farm payroll or interest rates announcements here on this Thursday. Last week, the euro took a bit of a beating. Well, we saw a lot of positiveness to start with. However, at the end of the day, we saw negativity in that particular setup. However, non-farm payroll figures really, really good, pushing price higher, but not subsequently getting above that major support and resistance level here in the shape of the 23.6 fib, weekly fib. And we also have the institution above price. So here you can see the sentiment long term on the monthly very much negative, weekly also negative, and the R squared is complementing that. But the moment we start moving into the daily, 4-hour, hourly, etc., intraday, that sentiment is now starting to look positive. Okay. However, the longer we fail to break above this 23.6 and the institution, the more likely his price is going to start to waver to the downside. That sentiment is going to start to fade away, and then we're going to start to see a retracement or a continuation in the direction of the long-term sentiment. It'll just pan out here on the daily. You can quite clearly see May of this year we had attempts above the monthly fib, then we had a lot of tweezed tops as price failed to really take that momentum and drive it higher. But you'll notice straight away that we're not making any new highs. In fact, we're seeing lower highs. And just recently, over the past week or so, we've had a pullback, and this is now forming a new swing low. But we do need to see a movement lower. You can quite clearly see what we have here is we have a blue arrow, blue candles. The RMO is just slightly above the 0 level, but the RMO is also above, but consolidative. And that's primarily because we've seen consolidation this week for the US dollar. So this is not going to be true buying sentiment until until we do get above the 23.6, until we get above the institution. Get above that, find support, and then long term we should be kicking on towards that 23.6 up here, which is my monthly fib retracement at 97, 70, and 30. Okay, failure to do so, we are still buying against a very strong negative trend. Okay, you can see there's a lot more support through here. Price was spending more time above it, now she's spending more time below it, and that's a negative sentiment for me. So if you're looking to buy, you're going to be very aggressive with your entries and stops. Target the first level here, which would be your 22.6 weekly and your institution on the daily. Then take your profit and run, because it could clearly pull back. Wait for a nice break and close higher, then start to look back at the template again. Look to see if everything complements that breakout. The R-square's got to be complementing that buying sentiment, and then we could start looking at targeting the price swing, etc. to the upside. Last pair of the day, the US dollar, Japanese yen. On our 4-hour time frame, let's go to our daily quickly. This one, a lot of buying sentiment for the US dollar against the yen. Yesterday we had a very bullish counter indeed. I did mention yesterday in my video analysis that I wasn't looking to trade this until we got above the monthly fib. And do I have it? You bet you. Okay, you can see the daily candle now. We had a pullback over the Asian session. Okay, and now we're seeing that buying coming through now. So as long as it maintains and closes above the daily high, which is exactly what I'm looking for, so I can take a horizontal line and put it above the daily high, then drop down to my 4-hour time frame. There we go. Just move that daily high. Let's move it. Come on. Apologies, guys. Okay, so now my 4-hour time frame, I've got to see a bullish engulfing counter close higher than that. Then I've got to wait for my hourly to complement that sentiment and drive higher than the 4-hour close. My indicator box is very much positive. It's telling me I should be looking for upside. It's closed above the monthly fib, which is exactly what I wanted it to do. Happy days. So I'm looking for higher highs, and ultimately I'm going to start looking towards my weekly high, which is my major high this year. And that is a very healthy, if I take where we are trading right now to the level, a healthy 341 pips above price as we speak. So as long as it maintains above the monthly fib here, then we should be targeting further buying opportunities for the US dollar against the yen. If it gets back below the 50%, then look for pullbacks back to prior support and resistance level breakouts that we've seen back towards your weekly fib down the bottom over here. But as it maintains above the monthly fib from now on, this should be your intraday support. And now you should be looking for opportunities to get into price with direction, and then target those highs that we've just come from, which is 103.86 and change away. So looking for nothing more than buying opportunities against the against the yen this morning for this particular pair. That's it, guys. Short and sweet. Please, if you are using this template or any of the Serene Education templates, please back it up with sound money management, guys. Follow the rules of the template. It's got to be treated very mechanical. I keep mentioning it to our students and anybody out there who's looking to potentially take this strategy on board to better your trading style. You have to treat it very mechanical. We've actually built it so it is a very mechanical approach. Those of you who trade very emotionally are going to get stung in the market, or will be stung and will continue to get stung. You've got to have something that's very, very mechanical in its approach. And I've noticed, and Nikki and I have noticed, since using this very mechanical approach, we've been far more profitable in our trading. Okay, so if you're interested in getting hold of this particular template or being taught by Serene Education, there's an email at the end of this video. Please get hold of us. Don't feel shy. Any questions you might have, we can answer them for you as soon as possible. Otherwise, I'm going to leave you with that. Have a fantastic weekend with family and friends, and I'll catch you first thing on Monday morning. Until then, you guys trade serenely.